At the same time, uh, so many people out there have been basically saying, get rid of the dollar and buy, Bitcoin, cryptocurrencies, right? And there's been this big push, and there's still a big push. But if we go to our crypto charts that we also look at in our sessions, we could see Bitcoin has just been falling from our larger time frame supply zone the past 3 weeks. And that supply zone we've gone over many times for months now has just been sitting there, right? And at the same time, I know that demand zone here looks far away. There is a closer demand zone, but it's really not till inside here. I can show you that on, we can probably go to this time frame here. Basically, what I'm getting at is the first, real significant area of or demand zone. It's really not till just below, right around 27,300. Does that make sense? So the point here is, if you're focused on what's being said and what you feel, you can easily have the mindset of bearish dollar, bullish, Bitcoin and cryptos, right? However, when we focus on just objective supply and demand, it's the opposite, right? The dollar, as we've been saying in these sessions, have been just a very bullish market. Demand zones below, supply zones far, and Bitcoin has a very bearish scenario according to supply and demand. Does that make sense? So I just wanted to give you one example, a big one, and this is a bigger one, of just that big difference. And then if you think about it, months ago, when the dollar was at demand and cryptos like Bitcoin are at supply, had you made that switch, it would have can very easily have a devastating effect on your, financial well-being. Now, having said that, we can bring things way down and come down to, day to day, week to week opportunities. And for example, like here in the U.S., and I know not everyone is in the U.S., right? But in the U.S., for example, there are some significant economic reports that come out each month. Non-farm payrolls, meaning the jobs number, CPI, which is a measure of inflation, some earnings reports from time to time, the Fed, and not just the Fed here in the U.S., right? Other big countries that have central banks that announce their decisions on interest rates. So there's a lot of kind of bigger news that comes out on a regular basis. And again, when you focus on, the key is to focus on what's real, not what you feel. And probably the most important lesson with all that is to make sure that you understand that any and all influences on price are reflected in price. Now, what does that mean? That means we could talk all day about, news and have an opinion on this and an opinion on that. Right now, it's really the big talk is inflation and the Russia-Ukraine conflict, right? And of course, with both of those, there are completely opposite opinions on both sides of those arguments, right? You have major banks saying one thing, major banks saying another. You have one government saying this, another government saying the opposite. So what you have to understand is anyone around the world, whether you're a big financial professional or someone just sitting at home trading their own account, everyone has an opinion. Everyone has a perception on all of this information. And with today's 24/7 news cycle, right? It's just nonstop. Well, the most important thing to understand is any perceptions that are strong enough. Well, thoughts and perceptions on all of this information are going to lead to one of three things: a buy, a sell, or nothing. Right? Now, we don't care about the nothing. It's the buy or sell we care about. And that will always be reflected on the price, on the chart, right? So another way to say that is any and all significant influences on price are reflected in price, right? The news that is out there already, people that feel strong enough about that news, meaning strong enough to actually risk money in the market, have made that decision. And that trade is put on. It's in the market, right? So any and all influences on price are reflected in price. Does that make sense? Anybody have any comments, questions on that? Okay, does that make sense? And why this is such an important topic is because when some significant news comes out that's, say, negative, really negative, that is going to typically invite a lot of sellers into the market, meaning a lot of supply. That supply is going to drive prices lower because the market has to find a price level where there's enough demand to fill all that supply. Typically, that's going to be one of our demand zones, right? Because again, what's the focus for us for demand? A price level where demand greatly exceeds supply. In other words, a lot of buy orders sitting there. That's a demand zone. So bad news comes out, price moves down or gaps down to an area where demand greatly exceeds supply. Now that trading is going on, those orders are being filled, and all of a sudden that last news-driven seller sells at a price level where demand exceeds supply. Now the next move in price is up, right? And typically price moves up very quickly when that happens. And that's when people get confused. They say, well, wait a second, how can price rally so much when the news was bad? That's why it rallied. Everybody that came in and sold, that brought prices down to a price level where demand greatly exceeds supply. Everybody sold, right? Competition to buy now forces price higher. Does that make sense? The key is to really be prepared with your, with your supply demand zones. Now, let's take the news and let's take this whole topic concept to a whole nother level during this session, right? And I'm assuming most of you are not brand new to the real supply and demand strategy. So if we look at, we can start with we can look at the S&P. So let's take a look here. Maybe even just by looking at the SPY. Let's take a look. So, and the zones that you see on the chart, two things just so you understand what you're looking at. One, these are all zones we go over with our members in these in the morning sessions that we have at the Pinnacle Institute. And two, many of these zones are driven by our proprietary supply and demand algorithm. But take a look at these. So now let's talk about news, significant news, expected news versus news that is not expected, right? Right? Big difference there. Big difference there. So you see these two demand zones here? Okay. So the two things we focus on, and again, in that Wednesday workshop, by the way, which is free, I'm going to take this concept much deeper. I mean, I'll take it deep here, but we only have a certain amount of time. So let me get at it here, and I'll explain. So we have two demand zones sitting here. Notice they're inside this range. See that? Now, this 436 we've had in for days, at least a couple weeks or so. Now you can see in the, if I include overnight activity here, we've already been into, we kind of hit this morning. Well, we did, right? So this is so far this morning's trading. Prices dip into this and rally. What if So two pillars to the strategy, to the real supply-demand strategy, the original supply-demand strategy, are structure and location. It all comes down to that. Structure of a supply-demand zone needs to meet the minimum criteria, and then location of that supply-demand zone. So let's talk about that here, and let's bring news and unexpected news and stuff like that into the conversation. This morning, there's always news, and lately the news is not great, but this morning, over the weekend, there wasn't any, significant negative news, right? So the market gap's down yesterday into today. The S&P, right, one of the biggest, most visible equity index markets in the world. And now we're getting a little bounce from this 436 area, right? Nice little drop base rally demand. Not a big deal. However, okay, what if there was, and price obviously turns here because the supply and demand imbalance at this zone was large enough to cause price to turn, period. So what if there was some really bad news over the weekend coming into this morning's trading session? Some really bad news that invited in a lot of supply. How would this level have fared? What would have likely happened to this zone right here? Would it have had just as good a chance of working out? No, because the supply demand imbalance that caused prices to turn this morning had enough. It was large enough to cause prices to turn right here, but more supply coming in would have pushed prices lower, right? The orders in the zone tell us that. But what overall, when it comes to strategy, what really helps tell us where those supply demand zones are that have a large imbalance versus the ones that don't is location. And when you look at where these two zones are located, right, these are not high probability demand zones. This one's working out fine. But as I tell our members all the time, if what I say is, in the absence of new significant negative news, these zones should be fine. Sorry about that. However, if there is some new negative news, significant, right, big news, price should not have a hard time getting down through this range. Does that make sense? Okay. Does that make sense? Same thing on the supply side. Right? So, good question there, Subham, on trend. We don't focus on trend at all because, again, uptrends begin at demand and end at supply. Downtrends begin at supply and end at demand. So, in other words, as long as we generally get our supply and demand areas correct, you're playing the trend, the right way, and versus getting in after a big move in price or selling after a big drop in price. Like, for example, I mean, it's if you're a day trader, right? Today price got down to our demand zone, which is where if the risk and reward meets your minimum criteria, you're a buyer, right? Or day trader, active trader, whatever, swing, whatever. You're a buyer. But if I come down to a smaller time frame, but here's what I'm getting at. But if you have to wait for a big uptrend to start buying, well, you don't even have that yet. You see my point? the uptrend here is not going to be visible on this time frame or even a smaller time frame until you then have a series of higher highs and higher lows, right? So that's why we don't even, like, if you're in our sessions, if you come to that session on Wednesday, or you're in our morning sessions, the word trend is never even mentioned, right? We don't want to be buying after prices have gone up already. We don't want to sell after prices have gone down already. Make sense? Okay. So it's that whole, news and price, right? Perception and all that. Look, there's a reason why, nobody knows exactly what the number is, but if you research, how many, when it comes to making a profitable buy and sell decision, the majority of active traders lose money according to available data, and there's a reason for that, right? Most people, when they hear good news, they want to buy. When they hear bad news, they want to sell. Well, often, if you're selling when the news is bad, price is at, where is price? That's the main question. Nobody asks that. People don't ask that question. Well, that's the problem, right? By the time the news is good, price is usually at supply. By the time the news is bad, price is usually at demand. Now you can see, after prices turned higher at our demand zone this morning, they're now nearing a smaller time frame supply zone. So at this point, you may have a very small time frame uptrend underway, which maybe tells the trend trader to start buying, but you don't want to do that as you get close to this thing. If anything, as an active trader, you'd want to consider being a seller, right? Now, these gray boxes, if you've noticed, the supply demand zones on the charts have different colors. There's like 3 different colors. What the gray zones mean is we color code our supply demand zones based on probability. In other words, is a zone inside the range or outside the range? You follow me? Is it a fresh zone or a tested zone? So we want to make it easy for ourselves, for our members, so we color code our supply demand zones based on probability. These 2 are inside the range, that's fine. If there was some significant news to the down, negative news, right? Let me show you something here. I think it's these charts right here. Oh, no, it's these. Hang on a second. I'll show you. So let's say there's some like new unexpected negative news, right, on the markets. I want to show you. Whoop, not there. We've looked at this zone before. It's probably this one. Hang on a second. Not sure why we don't have enough days here. Let me get some more days in here. Here we go. All right, let's take a look. Yeah, what I wanted to share with you here. Wait, one more second. Where is the chart I'm looking for? We've been over it. Oh, here it is. So, the range, like here, for example, right? So, I just showed you these 2 zones are inside this range. If there's some new significant negative news, right, which means there's probably not enough demand in these zones to stop prices from falling, we would then expect price to go below this range, out to zones like that one. Remember the 410? We've been over this one too, right? This is below the range. Okay, so in theory, the supply-demand imbalance below the range is almost always going to have a much bigger supply-demand imbalance than these 2 zones I just showed you inside the range. And that's how we work the whole news and price game, if that makes sense. I see what you put in the chat here. Yeah, so if I understand your question correctly, part of what we're talking about here is that you're getting at is, what type of trader are you? If you're a swing trader, for example, no one's gonna use all these charts that we have in front of us here. Okay, I'm just delivering sessions for for you folks at FX Street and our members sometimes, but these are 2 day trading time frames. Our swing trading workspace is really these charts right here, and our longer term sort of position or investor works charts are right here. So, if you have a swing trading opportunity that, when you look at structure and location, is meets the criteria uh, that we need, fine. We don't need to look at a 5-minute chart to qualify that. We don't need to look at a monthly chart to qualify that, right? Our swing trading general time frames are plenty. Just like when we have a qualified opportunity on for a day trading opportunity, we don't need to look at the larger time frame to qualify that. Okay. So, what type of trader are you? Set the workspace up properly for that. We apply the structure location analysis to, map out the opportunities, and that's that. I mean, it's going to be, for example, you're going to have plenty of shorting opportunities as a day trader, while prices looks like it's going up from a longer term perspective. You know what I mean? Be very careful mixing all that together. That's where things become very difficult when you're trying to line up with many different types of many different time frames to make one specific trading opportunity work. Yeah. So, for example, there, Shubhan, I see your question there. Let me go to the. Let's go to the. Let me show you one here. So this is one that hit this morning. We were going over this one, but actually, let's go to last week's trading in the Russell. Okay. So last week, the Russell, right, almost hit our supply zone, and then we have our demand zone down here. But when price came up here to the supply zone last week, we don't want to not take this trade because there's a little 2-minute demand zone. In fact, if I go over here to the 5-minute chart, right? That's an old zone. Right, so I believe that's the high. Let's go look at that, right? So 2036, okay. So there's 2036. So you have all these, you got little bounces from these areas, maybe even that a little bit, but you don't want to not take this opportunity to sell short here into that swing trading supply zone, which I brought it up because of your question, because you have maybe little speed bumps of demand over here. And then all these are inside the range anyway. So nothing in here is likely to work out well because you're inside this range, right? In other words, you don't want to not sell short here because you might have a little day trading demand zone sitting there, right? Because the reality is, here's supply, here's demand, and inside here is fair value. And remember, the fair value is going to be that true magnet for price. Yeah, that's a big question. How do you find a supply demand zone? It's a great question. The very basics of that we've gone over here many times for many years. So I would suggest, instead of, because we don't have time to dive into all of that today, I would suggest 2 things. You can go back and watch videos, or again, I can put this link in the chat here. You can always show up Wednesday. There's a special session on Wednesday. You can click on that, register. It's free. That's where we'll go into really the basics of our structure and location analysis. Okay. But again, what happens is, if I blow this chart up again, it's all about supply, demand, and fair value. Fair value is the middle. This is where the majority of trading activity is going to take place. Remember, fair value is where the majority of buyers and sellers in a market agree to buy and sell. Right? Most of the time, what's going to push price out of that middle is some unexpected good news, which is just going to bring prices up to supply or retail prices, where we want to be the seller. Or there's going to be some maybe unexpected bad news, which is going to bring price out of the middle down to demand zone, or price levels where demand exceeds supply. Another word for that is wholesale prices. Make sense? And ultimately, prices land right back in the middle. That's how markets work. Supply, demand, and fair value. Remember, this supply, demand, and fair value concept is not unique to the financial markets. It's any market. Yeah, I mean, if you have small time frame zones that line up with the larger time frame zone, that's only a good thing, which I think is what you're asking. Now, these two zones here, you might be looking at it. This is not related to what we're talking about here, but why are those gray circles and not gray boxes? Because they're overnight supply and demand zones. Remember, we color code our supply demand zones based on probability. Okay, let's keep going. Let's keep going at this. Now, at this point, if you have markets you want me to take a look at, not a problem. Just put them in the chat, and we can go through them and apply our supply demand criteria, right? Our structure location analysis. Here's the Dow, same thing, right? The yen, yes. Let's go look at the yen. We'll look at silver also. So the yen is, if you know the yen, it's incredibly weak. Let's go take a look. I assume yeah, Jack, want to look at the spot? All right. Okay. So if we take a look here, now if you go to a larger time frame, you'll see where, actually, let's go to this. I want to take you to, I think it's this chart. Now I'm going to go back as far as we can go back, because the yen has just not been here for a very long time. And I'm not sure how far this will take things back, but now we're going to put a horizontal line across this price, and we're going to scroll back until we hit price, which I think I have enough data in here. Yeah. So we're just running into this. This is an area that is likely to, finally turn the yen, the spot yen anyway, lower, right? For a bit. You see that? So we've got a supply zone there. Of course, you have to go all the way back to looks like 2002 to see that. That's okay. Remember, because a lot of people say, well, wait a second. So let me ask the question, because I think this is a question that's in a lot of people's head. They'll say, it might be thinking like, wait a second, are there still sell orders sitting up there from 2002? No one is suggesting that there's still orders sitting around from way back then. However, the supply and demand scenario is still giving us the same. It's the same evidence, right? It's not, but my point is, it's not necessarily the same orders that are sitting there. Okay. Now, even though the yen is likely to turn lower from this area, we do have demand zones below. And the closest qualified demand zone is really this 123.95. That can be found on that 4-hour chart there. Nothing super special about the 4-hour chart, so don't worry about that. Okay. And the other thing too, because we're getting close to this area of supply up there, be careful with demand zones too close to that. Okay. For example, we can look at this and say, is that a demand zone? Or it's not. It wouldn't qualify as a demand zone. But my point is, even if it did, the profit zone is not there. It's too close to this upper supply zone. Make sense? So let's go to the, we'll go to gold in a second, but since we're on the FX markets, let's go to the, why don't we go to the dollar and then we'll go to the euro. And you'll see the dollar is sitting in our larger time frame supply. Here is a tested level that we've had on the 4-hour chart for a long time. Demand zone down there right around 99. Okay, so keep that one in mind. And remember, prices can even go a little bit deeper into this because this is a very tested zone when you look back. But anyway, there's that qualified demand zone down there at 99. And then having said that, let's go on to the euro. Okay, so dollar into supply, obviously euro down into some demand. Again, this is tested demand. Obviously the fresh, much higher probability zone is down here, but we're very far from that. Not likely to get there anytime soon. Also on the demand side, let me just show you. Oops, not there. I know we had another zone to take a look at. Here it is. It was here somewhere. So there's the 107.30, which is sitting not too far below. So if the dollar makes a kind of pushes a little bit higher and gets back up to that supply zone, we'd expect another turn lower, which and again that would likely bring the euro down to this demand zone where we'd see expect to turn higher. Does that make sense? While we're on the FX markets, another market that has some zones coming up. Let's look at the Aussie dollar, and then we'll go to the metals. Don't worry, we have time. So the Aussie dollar right here. So these are zones from the last couple weeks, right? Remember, two supply zones sitting on top of each other. Price turned there, and now the price is turning lower. Keep in mind, those supply zones there are against this demand zone that we'll see not too far below. 73.22 is where that one comes in. Okay. Now, having said that, I know you want to look at gold. So let's go and do that. And here, let's go to the let's go to this chart right here. So we came up to a tested supply zone. We do have a couple demand zones below. It's actually going to be easier to see in GLD, but we'll go to that in just a moment. I know we had another one for you here. Maybe it's on this chart. No. Yeah, the problem is there's not much above this pivot right here to stop prices from falling. So that's why the 1937. I know it seems far, but there's really not a lot of quality, inside here. If I go to GLD, which is the ETF for gold, which we look at that a lot, you can see we gapped up into supply, and same thing on the demand side. The closest qualified demand zone is really around the 180.5 mark, right? 180.50. Okay. And we can take a look at silver. Yep, let's go over to, we'll start with silver futures. There's a lot of tested zones here, you'll see. So the key is with the demand zones. So here's silver, right? Above these high, we don't want demand zones that are anywhere close to these larger time frame supply zones. So that's why we've gone with zones like this one. This one was just hit last week on the demand side in silver. Hasn't made it back to the 2661 supply, but this can certainly happen this week. I know one or two of you were looking for wanted to look at silver. Here it is. Notice the location of this supply zone. It's above the range, right? That's key. We've talked about that. When it comes to, again, if we go all the way back to the basics, right? The question and goal is, where is price most likely to turn? The answer to that question is at price levels where you have a significant supply-demand imbalance. Right? Where are those zones likely to be? Outside of the range, not inside of the range. Another way to say that, outside of fair value, not inside of fair value. That whole structure location, right? Fair value, supply demand, right? That's the key. Does that make sense? All right. So having said that, whoops, there we go. So let me do this. So for those that are, want to take that structure, location, whole, conversation deeper, you can always, there's that Wednesday workshop. I know I'm definitely doing that one. This one right here. I don't know if, there we go. This one. Might be doing this one, might be doing that one, but definitely doing that one. So these are free, and the focus there is structure location. Try to go over as much as we can in these FX Street sessions. But look, anytime we're together, the goal is to make the most of our time together. So good questions in the chat, good comments. Yeah, thanks for the kind words there. I just looked back. Yeah, look, anytime, look, during any of these sessions, right, and there's been a lot of them, we can all be doing other things. So when we're together, let's try to make the most of our time together, and keep going from there, right? All right, there's a link in the chat if you need it for the session, but you have to register for these, obviously, but they're free. All right, have a great rest of your day, and hopefully that was helpful. And all right, Zach, I can have someone reach out to you. Not sure what the issue is there. Okay. All right.